Buyers are fleeing the U.S. housing market. Let me make the face that I made in the thumbnail. Buyers are fleeing the housing market so rapidly that I was out for a walk earlier. I almost got run over because stampede of people running away from their home purchase almost ran me down. Okay, I'm exaggerating a little bit, but I just want to be more like some of the channels out there that says or that say everything is crashing. All right, so let's take a look at the people fleeing the housing market. They're backing out of their deals. They put in an offer to buy a home and they just changed their mind. They pulled their offer back out. And let's look right here. This is the housing market in San Diego. These buyers are just running away from their deals. Oh, wait, never mind. That's Sri Lanka. In Sri Lanka, these people are protesting the economic collapse. Soon to come here to America, by the way. That's my prediction. Soon to come here, America. Soon to come here to America. This will be Americans protesting the economic collapse. But seriously, home buyers are canceling deals at the highest rate since the beginning of the health crisis. In fact, about 15% of existing home sales were canceled, homes that had went under contract. And that's for existing homes, but home builders are also seeing much higher cancellation rates, people backing out because they're uncertain about the economy. They see the talk of recession. They probably look at their own finances and they see, hey, our bank account is getting drained, paying this outrageous cost of living and everything else that's just at all-time high price levels. So it's economic uncertainty. It's people's own personal finances have changed now. People just filling up their gas tank just a few times a week can really put a dent into your finances. And kind of like we talked about here, people are getting a dose of economic reality. Also, just the fact that home prices are slowing and in some areas actually dropping, it also has people very hesitant because why would you want to catch a falling knife? Why would you want to purchase a depreciating asset? Now, of course, there's people out there that really are buying a home for the wrong reason. They're buying a home because they want to build equity, which is good, but how's about just a place to live? So if you can afford a home and it's going to be a nice place for you to live, for you or your family, why not still buy it as long as you can afford the payments? So if you can afford the payments or if you can afford to pay for it in cash, why are you concerned that the price is going to go down? Well, because people now use their homes as ATMs. It's no longer just a place to live. It's now an investment. People pulling money out of their home to go buy other homes or make other investments. By the way, a lot of people pulled their money out of their homes, took out home equity lines of credit to invest in the markets. And a lot of times, in many cases, we've talked about it here in this channel, the markets crashed and now they still owe these home equity lines of credit for the money they borrowed and their investment is underwater or they lost money. And that's a sad thing, when you see people do that. But there's lots of people out there in that boat. Now we're seeing affordability at the worst point that we've seen in history for the housing market. And when you look at people's dwindling savings and these elevated prices, affordability across the board is the worst that it's ever been for U.S. households. Now, people are saying that, okay, inflation may slow down. If it slows down, is that going to help? Well, not really, because you're still higher than what you were a year ago. We're higher than what we were 2 years ago. So even if inflation goes to zero, that means we're not going up any higher than we already are. Just the fact that we're already at unaffordable levels is a big problem. So we need to see deflation in order to make things affordable again, not just a slowdown or stoppage of inflation. The stoppage of inflation means prices just stay where they're at. That means home prices are still unaffordable. That's why people are taking on massive amounts of debt. That's why credit card debt is soaring. That's why debt levels across the board are at all-time highs. We really do need deflation to bring things back to an affordable level. But a lot is being done right now to prevent deflation. Let's talk about the shenanigans that are happening right now in the housing market. All right, now folks, get ready for this. I think most of you may not realize this. 2 million households are still in mortgage forbearance, foreclosure forbearance, or the repayment program, the assistance program, what I call here the rescue program. From over 2 years ago, with the onset of the health crisis, over 2 million people now, 2 million households are still in forbearance. So we have not fully exited the rescue program that was implemented after the health crisis. How crazy is that? Now, when this first came out, about 7.25 million borrowers participated in the mortgage forbearance program. About 72% of those participants have left, with 28%, more than 2 million people, still in active forbearance. So how is the housing market going to crash with these types of rescue programs still in place from over 2 years ago? And what's going to happen if home prices start dropping on a large, broad scale? Will they just re-implement the rescue programs? Why wouldn't they? And that's why I continue to tell people, if you think home prices are going to crash, you may want to think again. And I hope I'm wrong. I hope home prices do crash, right? I'm like most of you. I've been waiting for a better buying opportunity to upgrade to a bigger house, right? I'm in an 1,100 square foot house here in California with a family that's asking to get a bigger house. And I've been telling them for years, okay, we're going to wait it out. We're going to wait it out. And, we're still waiting. Yeah, I'm waiting for a housing market correction like a lot of you. And I know a lot of you are going to say, JJ, get out of California. You could buy something much cheaper. I know that. There's reasons why I'm kind of stuck here in California. I use the word stuck. I actually do love San Diego. California has a lot of problems. But compared to Michigan, where I'm from, in the winters, the weather's one thing. But just there's a lot of things that I fell in love with here in California. The Mexican food, love the Mexican food. Being able to go to the mountains and go to the beach. You can actually go to the snow in the mountains here in California during certain times of the year. And of course we have the beaches. If things continue to deteriorate, the negative might outweigh the positive, and ultimately I may have to move. But when you have kids and schools and other family members out here, business out here, it's not as easy as picking up and moving. And if it were just me by myself, I might not even want to live in a house. I might just buy an RV and just be a permanent traveler. I really wouldn't want to just be in one place. So yeah, there's lots of reasons why I'm not leaving California. I digress. I apologize. But yeah, 2 million people in forbearance still. So what kind of housing market recovery are we in? Right? These are people that got into their mortgages years ago. These same people trying to buy at today's price levels in this housing market, how much more trouble would they be? And they already can't handle what they paid for homes many years ago. But guess what? It gets even crazier. Look at this. Adjustable rate mortgages are making a comeback. The demand for adjustable rate mortgages, also known as ARMs, has tripled since January. So what have we learned since the previous housing bubble? Does anyone not remember the previous housing bubble? Are these just new buyers that are buying their first home and they don't remember what happened and what was one of the reasons why the bubble got blown up so big? It was because these types of mortgages, and we're doing the same thing now that we did back then. They're even talking about adjustable rate mortgages in India. Business Insider India, a kind of mortgage that helped cause the 2008 housing crash, surging in popularity. Oh, but wait, this time it's different. That's what the article says. Is it different? Yes, it's a lot worse. Is this bubble going to get bigger? Is it going to crash? Well, mortgage rates just took another dip. And if they wanted to crash the markets, wouldn't they just raise rates consistently or raise rates without pulling back on the rates? Or is this going to be a controlled collapse of the housing market? Please let me know down in comments. Crash, collapse, controlled collapse, or more inflation because all these adjustable rate mortgages, the forbearance that's still in place for 2 million households, will they just up that to cover a broader spectrum of people behind on their mortgages? Please let me know. Hope you guys like this update. Please subscribe, like this channel. If you like what we talk about, come back for more updates. Economy, financial news, housing market, stock market, investing, you name it, we're going to talk about it. Thanks for being here, everybody. Peace.